Okay, let's analyze the 5-minute structure of the Bank Nifty future, which has happened on the 11th January. So first, my ideal view was basically on the put side. The main reason is I just went to the 1 hour time frame, and one thing I just saw is we were in a tight trading range sort of a pattern, what was happening, and then more or less a freak trade has happened. Leave the freak trade. If you see on the spot chart, this is almost going to be a green candle, very strong green candle on the upside, and the price was rallying steadily up. Okay, and when it is rallying, a small pause on the trend, again the trend is trying to break out on the upside, and the price is going higher. So if you see, the bull rally is quite strong here. Why do we say the exhaustion has happened today and then a price started to fall down today? So this was nothing but a breakout, a spike is happening, and if you see, this is a channel which is forming. Okay, and then from a tight channel we are entering into a broad channel. Okay, but this broad channel is turning out to be a wedge, 1, 2 and 3. So more or less a wedge pattern is trying to form here. On the wedge top, can you short it? 1, 2, 3. On the wedge top, can we short this? So once you short this, we have a very strong leg. So we're expecting some trading range happening. But okay, with this view yesterday, let's go see what's happening in the 5-minute. Okay, the same lines are there on the 5-minute as well. So market opened somewhere here. And once the price touched this, and more or less it turned out to be a climatic bar, and then it reversed straight. Correct? And then we had 1, 2, 3, 4, 5, 6 bull bar straight on the upside. 1, 2, 3, 4, 5. For that, whoever have bought at the lower levels got an exit, and then price started reversing down. Only logic for you to enter on the other candle is, once the price tried to go up, it never crossed the line. So the market is respecting that line. Once it starts respecting, that turns out to be your key line for the entire time until the market respects that line. Okay, so we're not supposed to remove that until it just goes off the line or way away from the line. And once we started falling, okay, this bull, okay, I don't say it's more or less like this two bear bars taking out the bull bar and closing on its low, at least the touching of the low. And once it takes out the low, can you enter on this candle? Enter it. Okay, so it's 1, 2, 3, 4 bear bars straight down. So we can expect one more leg down. That's why you guys would have remembered saying that I would have told that at least day's low will be touched again around somewhere around 950. Okay, and then price went up, which was forming a sort of 1, 2 and 3. Again a wedge bottom for me. 2 turns out to be the overshoot. Though it is a tight channel, what has happened, the context is basically very strong on the previous side. If you see, bulls are acting. So every bottom would be respected and the price goes higher. Correct? So for 1, 2, 3, I expected one more leg. The leg was very weak. If this was a strong rally, then we could have expected the price to go down further. But this bar took out almost 1, 2, 3, 4, 5, 6 close bars of the bear side. And this bar gives a hint that you can go on the buy right now on 1025 candle. And the open of 1025 candle, if you go on the buy side, the price starts rallying up. Okay, you got a deeper pullback, but still your stop is not taken out. Basically, low of this candle is going to be your stop, and then price has steadily gone up. Okay, and the price has almost come till your stop loss, and then it has gone higher. Every place it turned out to be a bull sign here. Correct? What has happened here? We tried to form a bull channel. So the same concept which I was talking in 1 hour, a spike and a channel is forming. Okay, a pullback has happened, a pause in the trend, and then the trend is trying to resume. So more or less, this turns out to be a second leg trap in a trading range. Okay, a second leg trap is nothing but we are almost forming a trading range, and this turns out to be the breakout phase. It tells you that you can go buy on this candle, but it generally turns out to be a trap. Then we got two red bars. Okay, at the higher levels. I wouldn't go and short it at any of these bars because I have 1, 2, 3, 4, 5 full bars here. When 5 bull bars are there, I'll expect at least one more leg up. At least 80% of the highs to be touched. 80 to 70% of the highs to be touched. Once I see the highs to be touching like that, that's when I will look for a reversal trade. Okay. So all I saw was this whole entire zone you're not supposed to trade because this again turns out to be a wedge. 1 push, 2 push, 3 push down, 1, 2, 3, and wedge bottom, price reversing strong, it is going up. If you have seen, I would have commented that the price will go up higher, expect an up rally. Correct? And then it was slowly making higher highs here at this current point. And then if you see inside bars contraction triangle, which is breaking out on the upside, and I would have told you that the price is going to rally on the upside here itself. And once the price was forming this, I was super confident. And then once it was breaking it, I was entering. Till the day's high, I was expecting the price to be holding it. After that, I expected the price won't go up. Or the only possibility here is, let's draw a line at the day's high and see what has happened there. Okay. So we have a red line there. So if you would have seen my message somewhere around 120 odd I posted, after 10 minutes, if I see the price coming inside, I will see some good bear bar and short it. Okay. Till now the logic is like II pattern is forming, the price is breaking out, the price is going higher. And then if you see 3 bear bars are there, for this strong bull leg, we got one more bull leg, sort of a breakout failure at the day's high. Once a breakout is failing, it tells you, it gives you a sudden spike on the upside as well as downside. This is more or less, you call it a trapping candle. Someone who had entered in this low would have got butchered. Someone who had entered at the high also would have got butchered. Okay. So what has actually happened is on the next candle, it was a very calm candle, which ended at the day's low. Ended at its almost low, 70% closer. That tells you that the breakout has been failed. And right now you can enter on the put side on this candle. Once you enter on that candle, your stop is going to be somewhere here above this. Okay. And then the price started falling further. Sort of a pullback happened. More or less, it turned out to be a bull trend, wedge bull flag, a breakout on the wedge bull flag, a last leg rally up, and then price started reversing down. So if you see right now, 1, 2, 3, 4 candles in a bear trend, which taken out very strongly. So right now, do you expect a leg here? No. Why do we say this is a bear trend? This is a bear trend because this is sort of looks like an early bear trend. Lower lows are being made here. No swing is being touched, and lower high is being made. First point. So that this more or less looks like a early bear trend which has been started on the 5-minute time frame. The main reason for us to confirm this is a bear trend is we had a bottom being respected, a bull breakout has happened, and then we had a spike and a channel, and then spike turns out to be a wedge bull flag. Once a wedge bull flag is forming, you expect one more leg up. That turns out to be the last leg trap, and then price starts reversing. So our ideal entry on the short is this, okay, and your stop is this. If you are a scalper, one candle is enough for you to make money, and then this pullback is deep, yes, but it still holds this candle. So your entry on the next short is going to be below this candle. Once a red candle is forming, that tells you that yes, you can enter. Okay. And the stop right now is shifted here. And you could have ridden the entire ride as the price was falling continuously. And then yes, after 440, let it be the profit booking what has happened. That's where we see it. And more or less, this turns out to be a place where you could have holded few overnight positions as well. Okay, that is the day's analysis today. And if you go see the 1 hour time frame again, let's see the lines what it tells us. More or less the buying trend is sort of weaker, so that you can expect a sideways to gap down to sideways to a negative bias tomorrow. That's what it tells me. Let's see that tomorrow. Thank you.